Good morning or I guess evening, afternoon, whatever it is that you're actually watching this, but welcome to the Ashworth Wealth Weekly Market Update. I want to spend some time talking about tariffs, budget deficits, and all of those fun things that have been on everybody's mind since the election last November. We've had several of these updates based on tariffs, but we're starting to get more concrete data to where we can see exactly what is happening. Um, let's go back to last April. President Trump imposed a 10% baseline tariff on pretty much every U.S. trading partner out there. And there were also some pretty specific stated goals. Number one was to boost manufacturing. That is a very long-term goal, as I'm sure you can figure out. Uh, Factories don't just start overnight. It takes time for those things to happen, for manufacturing to rise. The second goal was to raise revenue, and the third was to reduce trade imbalances. And there is some positive momentum in both of those, with both of those goals. So the chart's going to talk a little bit about trade imbalances, but let's talk about revenue first. Since April, Treasury's collected record tariffs. In June, there was about 27 billion in net tariff revenue. So April through June totals was about 64 billion, about 2.6 times higher than the same time a year ago. Um, but import goods held up as far as how much is coming into the country. Now, a lot of that is probably due to front running, people purchasing in anticipation of the tariffs taking effect. Also, due to inventory that was already on hand, so that remains to be seen if that's going to continue. The Consumer Price Index (CPI) information is going to come out here in the next week or two, and all eyes are going to be on that to see if that is going to continue to hold up. However, we are seeing some reduction in deficits with certain trade partners, but we're also seeing increases with others. You've heard me say something along these lines before, which is business always figures out a way around regulations. They figure out how to use them to their advantage. And nothing in the world economy, I mean, really nothing happens in a vacuum, but nothing in the world economy happens in a vacuum. So as you can see by this chart, the trade deficit with China in particular has reduced by about 9%, European Union 4%, Canada 3%, etc. But our trade deficit with Taiwan has widened by 6%, Vietnam 5%, Mexico 2%, and so on. Um, Now, the interesting thing about this is that Taiwan, Vietnam, some of these other Southeastern Asian countries, their supply chains are pretty heavily tied to China. So even though the trade deficit with China has gone down, that is based on finished goods that came into the United States. If they are supplying Taiwan, Vietnam, other countries with materials that then become finished goods, and our trade deficit is widening with those countries, is it really solving the problem? Or just like water, is it just finding the quickest way down the hill? So there's lots of things to consider with this. The world economy is very interconnected, as I'm sure you're aware. So while there are positive signs coming out of these tariffs, meaning the trade deficits are being reduced, there's income coming in, there are some positive things happening. It's not always 100% as it seems. So you have to take kind of the good with the bad and at least do your best to understand what's going on out there. Now, as always, and we discuss this constantly, we take the long view on all of these things. So we like to be aware of what's happening. We want to make sure that we're paying attention to what's happening out in the world economy. But we are very much taking the long view on this, meaning we're going to have a globally diversified portfolio, which will take advantage of this no matter what ends up happening. If the US economy continues to grow, and we have more manufacturing jobs come back into this country that have been exported over the past, decades, well, that's going to help in certain areas. But if that particular goal isn't met, there's still going to be advantages to be taken in other parts of the world, and we're going to make sure that we have exposure to those areas. So I guess long story, we're going to continue to monitor this. As I said before, the CPI information is going to come out. There's a higher 15% baseline tariff that's coming out of most of the recent trade deals. And so that could have some effect. And depending on what happens with the CPI information, we'll have to see how the Fed reacts. So there's still a lot of moving parts to this. Does it really affect our long-term plans? No, but it is important to make sure that we know what's going on. So hopefully you found this instructive and useful. As always, we are looking to grow. So anybody that you feel could benefit from this, please feel free to share it with them. And anybody that you would like to introduce to us, once again, please feel free to share this information. And we're always happy to meet your friends, family, anybody that you think could benefit from our services. Continue to have a wonderful summer as we're kind of rounding that out, and we'll be back in touch soon. Have a great day. Thanks.